All right, hi everyone. Welcome to today's live trading session brought to you by IronFX. All right, before we begin, please take note of the disclaimer and the risk warning. The information is not considered as investment advice or investment recommendation, but instead is just marketing communication. So take note that the products are traded on margin and carry a high level of risk. It is possible to lose all your capital. All right, great to see all of you tuned in as well. Welcome back. All right, my name is Ketan Ramachandra, and this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, before we dive into the charts and trading view, let's take a look at what's coming up on the economic calendar for this week. There's quite a few things going on, despite reaching the tail end of the week. Right, today, on Thursday, 6th of March, we've got the ECB releasing its monetary policy statement, as well as President Christine Lagarde delivering a press conference. And tomorrow is going to be pretty jam-packed as well. We've got the highly anticipated non-farm payrolls and unemployment rate, which will be released by the Bureau of Labor Statistics. We also have Fed Chairman Jerome Powell delivering his speech, and of course, President Donald Trump as well, taking part in a panel discussion regarding cryptocurrency in the US. Oops, oh, wait, hang on, sorry. There's one slide I just was going to show you guys as well. Just hang on a second. Right, there we go. Right, so this is the calendar from Forex Factory, right? And take note of the time. Time stated here is GMT time. So we've got the ECB releasing its monetary policy statement at 1:15 p.m. GMT time, where they are widely expected to reduce their main refinancing rate by 25 basis points to bring it down to 2.65%. Now, it's all but certain that they're going to cut rates, right? In a bit, the economic activity in the euro area has been sluggish, while inflationary pressures have continued to dissipate lower, right? They've not hit the ECB's target of 2%, but they're getting closer, and combined with weaker GDP output, this paves the way for the ECB to move ahead with another rate cut. So this 35 basis points reduction is all but certain to take place. But however, what is going to be more critical is President Lagarde's ECB press conference, which commences at 1:45 p.m. GMT. Now, during this press conference, she's going to provide further insights into the outlook for future monetary policy action, and that is definitely going to drive the direction for the euro. Now, tomorrow, Friday, March the 7th, the Bureau of Labor Statistics will drop its non-farm payrolls report along with the unemployment rate at 1:30 p.m. GMT time. Now, non-farm payrolls are expected to grow 159,000 for the month of February, right? And we are expected to see the unemployment rate remain unchanged at 4%. However, given that we saw yesterday's ADP employment report point to a much slower rate of job creation, we only saw 73,000 jobs being created by the private business sector as compared to a forecast of 150,000. So a very significant miss in terms of job creation. Now, should the non-farm payrolls also miss its target of 159,000, while the unemployment rate unexpectedly edges higher, right? This is going to signal some concerns or raise concerns regarding the strength of the US labor market. And after that, at 5:30 p.m. GMT time, Chairman Jerome Powell will be delivering his speech and focusing on economic outlook. And at 6:30 p.m. GMT time, President Trump will be taking part in a panel discussion regarding cryptocurrency policy in the US specifically. All right, now with that, let's move on over to the charts and trading view and begin the analysis on the dollar index, where we'll work our way through down some of the major currency pairs and then touching on the commodities such as gold and oil and the indices. And of course, if you have any other queries, right, do drop your questions in the chat boxes, in the chat box here, and I'll be more than happy to go through your requests. All right, great. All right, that's a request for the Kiwi as well. So definitely we'll cover the Kiwi once we start off with the dollar index. Okay, now taking a look at the dollar index, we've also had over the last few weeks, right, the ongoing trade tariffs being implemented back and forth between the US and its major trading partners, which has created or which has heightened uncertainty in financial markets, in global trade, as well as increased the level of volatility as well. And this has also caused the dollar index to fall drastically, right? Demand for the dollar has fallen off a cliff, especially this week, right? The beginning of March, demand for the dollar has literally tanked, and that has caused dollar index to drop from 107.55 to as low as 104 earlier today, right? So you can see since mid-January, right? Since mid-January, after running as making a high or breaking beyond 110, the dollar index has reversed sharply, and at its lowest point today, it has dropped nearly 5.6% or about 600 pips, right? A huge drop over the last 2.5 or 1.5 months, right? And especially at the beginning of this week, from Monday, 3rd of March, the dollar index itself has shed more than 3.3%, falling about 350 pips. There looks to be no bottom in place. So let's try and identify where the next potential support area could be, right? We can see the dollar index has actually smashed through several key support levels, right? There's a nice uh, double bottom here that had taken place at the beginning of December last year. This level is at 105.72. This was previously a support level that had been identified, and this was smashed very easily on Wednesday, right? Dollar index smashing through this level very easily. And then again, it looks to be testing another key overlap as well. It's a pretty decent overlap at 104.42, which looks to have been cleanly broken today as well. So you can see there seems to be no bottom in place for the dollar index at the present moment. So let's see if we can identify any where the next potential support area could be. Now, when I zoom out a little bit and I look at the level at 102.57, I see a pretty decent overlap level, right? I see a pretty decent overlap that we can identify. And at the same time, right, I see a nice swing low, right? There's a nice swing low being formed here on 5th of November, right? So there's a swing low support here on 5th of November, and then there's an overlap level at 102.65 that has been in place since 10th of January 2024. So I think these are two pretty good contenders for identifying the next support levels, right? So let's start off. First support is going to be a swing low at 103.45, and the overlap support at 102.65 is going to be labeled as the second support. Right. Now, on this uptrend here, right, that begins from 27th of September, we can run a nice Fibonacci retracement all the way up to the swing high on the 13th of Jan. When we look at all the Fibonacci retracements, we can see the dollar index smashing through all the retracement levels apart from 61.8% and 78.6%. Now, if we look closely, 78.6% sits close enough to the overlap at 102.66, so we can identify the second support as a zone. And we currently see the dollar index seem to be stabilizing just above the 61.8% retracement, right? So this level here can be identified as like a downside confirmation level. So what that means is if the dollar index gives way, right? If this level at 103.97 gives way, right? Or pretty much the 104 level, if this level fails to hold, the dollar index is very likely this is going to slide all the way down towards the first support at 103.45, which is identified as a swing low. Now, what is also important now is prior support levels. Okay, before that, let's remove all the other retracements and just keep 60 and 78% in the analysis. Now, previous support levels, such as this one here at 104.42, this was previously an overlap support. And after price gives way, right, this level can be used in the identification of a first resistance, right? This level this level at 104.42 can now serve as an overlap resistance. Now higher up, I see another decent overlap, right? I see another decent overlap, and that level is at 105.15, right? We can see support taking place here on 19th of June last year, resistance here on the 10th of July, and then resistance once more on the 7th of November, creating a pretty decent overlap, which we can use in the identification of the second resistance, and that level sits at 105.15. Now, this is how we identified the first and second resistances, and as long as the dollar index can remain under 104.50, right? If it's remained under 104.50, it's very likely the downtrend is likely to resume for the dollar index here. And also, again, right, if it breaks through the 61.8% Fibonacci retracement, which has been identified as the downside confirmation level, right, it's very likely it's going to drop all the way down towards the swing low at the first support at 103.45. So this is why we can identify a suitable take profit target for any short trades that you may have on the dollar index. Right, so take note, overhead pressures are mounting for the dollar index. It has dropped for 4 consecutive days now. It's quite likely it's going to close in the red today as well. And this would be one of the largest weekly losses for the dollar index. Now, coming to the dollar index on the weekly time frame, we can see now that this index has dived more than 3% in 1 week alone. Right, this is probably going to be comparable to the drop that we saw in November of 2022. Right, we can see here back in November of 2022, the dollar index suffered one of its largest weekly declines, dropping over 4%. We're not really quite there yet, but a 3.3% drop is the largest drop that we've seen in nearly now 2 years, just over 2 years. So take note, very strong bearish momentum for the dollar index. Bias is clearly to the downside, and if the downside confirmation level at 104 gives way, we're very likely to see this index slide even lower towards 103.45, which is a swing low support, which we can identify as a suitable take profit target. And beyond that, beyond the swing low at 103.45, there's an overlap support at 102.65, which is accompanied by Fibonacci retracement at 78.6%. Right, now there's a request for the Kiwi as well. So now let's move on over to the Kiwi. Right, so if dollar index has been falling sharply over this period, then of course the Kiwi is going to be rising higher. We can see after dropping as low as 55.84, the Kiwi stabilized at the beginning of the week at around 56 cents. And since then, it has jumped more than 2.7%, right, or rising 152 pips in the process, right? A huge jump for the Kiwi, and is rising towards what I see is a significant overlap with swing high resistance, right? We can see back in February as Kiwi was rising strongly, it ran into resistance at around 56, 57, 65 before reversing to drop all the way down towards 56 cents. So once again, should the Kiwi rise up towards this level here, I think this is where it could stall. So this is going to be important as well because anyone who's long on the Kiwi, right, should be identifying their take profit target close to this swing high resistance at 57.60, right? This is a very significant swing high resistance that has taken place recently. And should you be long on the Kiwi, right? This is a suitable area to identify your take profit target for this currency pair. Now, beyond the first resistance, all right, we can cover gold as well, right? Once we cover one or two more of the currency pairs, we'll move on over to gold. All right, so beyond the first resistance at 57.60, where could we identify the next one? Right, this is, I'm going to have to zoom out a little bit, and I think I see a pretty decent pullback resistance at 58 cents, and we can see a very significant swing low being formed here in October 2023. This is clearly a very strong support area previously, and then we see another swing low bounce taking place here at the end of November 2024. So previously, right, this level served as a multi-swing low support, right? This level previously served as a multi-swing low support, which finally gave way in mid-December of last year. So after giving way, what was previously a multi-swing low support level can now potentially function as a pullback resistance, and we're going to be using 58 cents in the identification of the second resistance. Now that we've identified the first and second resistances, we can also run a Fibonacci retracement on this downtrend. We can see here this swing high beginning on 30th of September last year, going down to the swing low on the 3rd of February. Taking a look at all the fibs, right, we can see the Kiwi has already climbed above the 23.6%. So this level is no longer valid. However, we can see none of the other retracement levels align well with the second resistance. So that's fine. Remember, don't force the Fibonacci retracements onto the analysis if they don't match up with a predefined support or resistance areas. Remember, the Fibonacci levels are going to serve as a complementary uh, factor to the analysis and not functioning as the major identification of the resistance or support levels. So in this case here, very clearly, Kiwi has already climbed or retraced above 23.6%, while the other retracement levels do not align with the second of first resistances. So that's fine. Once again, don't force the Fibonacci analysis onto your charts if it doesn't match up well. Now, on this downtrend here that begins from the 3rd of February, we can also run a Fibonacci retracement from this swing high on the 21st, going down to the swing low on the 28th. The purpose of running this retracement is to look for extension levels. Key extension levels set at 137% and 161%. Once again, right, the extension levels don't really sit close to either of the predefined resistances. So once again, that's fine. Don't force the Fibonacci retracement if it doesn't match up. All right, now in terms of support, right, I see a pretty decent overlap level at 57 cents. Right, we can see resistance being formed here, a swing high resistance being formed on 24th of January, another swing high resistance on the 5th of February, and then a swing low support being formed here on the 19th. Right, so this creates a very significant overlap level at pretty much 57 cents, which we can use in identification of the first support for the Kiwi. Now, beyond that, right, we see, of course, uh, very significant swing low being formed on the 3rd of March and another swing low here as well on the 3rd of February. So we have a pretty decent multi-swing low support at around 57 cents, which we can identify as the second support here. Right, so now we can see Kiwi after making a high of And after making a high of 57.44 today, it seems to be pulling back. So with the bullish momentum currently very strong, any pullback towards the first support could be a potential opportunity to go long on this currency pair. Once again, right, the momentum looks to be strong. So any retracement towards the first resistance could be used as a potential opportunity to go long on uh, the Kiwi once again. Now with the Kiwi currently pulling back, we can also run a Fibonacci retracement starting from this swing low on the 28th of February, going up to the high today, 6th of March. Looking at all the fibs, we can see that the first support is also accompanied by a Fibonacci retracement at 23.6%. Right, you can see here it aligns very well. Let's zoom in a bit now. Right, it aligns very well with the first support. So in this case, we're definitely going to keep this retracement level in the analysis. Right, so we have identified a strong pullback support or overlap support at 57 cents. And should the Kiwi make a deeper pullback and stabilize around this level, it may help us identify another opportunity to go long on this currency pair. And if the bullish bounce does materialize, right, we would target today's high, right? Today's high at around 57.45 as the first potential take profit target. And of course, if this currency pair can reach all the way up towards this swing high that had taken place in the 3rd week of February, we'll be targeting 57.60 as the next potential take profit target. Right, so these are the key levels here for the Kiwi on the daily time frame. With the first resistance at 57.60, second resistance at 58 cents, first support at 57 cents, which is an overlap level. That's accompanied by 23.6% retracement, looking for potential bullish bounce of this level here for resumption of the uptrend. And of course, beyond that, there is a multi-swing low support at 55.82, which has been identified as the second support here. All right. Now, since we've got the ECB coming up, right? The ECB is dropping its monetary policy statement today at 1:15 p.m. GMT time, followed by President Christine Lagarde's press conference at 1:45 p.m. GMT. So with that going to be the main event of today, let's take a look at the euro and see how this currency pair has been trading. Right, so you can see here the euro, similarly to the Kiwi, right, has jumped sharply this week as well, right, due to a combination of higher spending and fiscal announcements made by Germany. which has triggered higher demand for the euro. So we see the euro skyrocketing, right, after dropping as low as 1.0360 last Friday. This currency pair has reversed to rally as much as 4.5% at its highest point today, right? And if you look just this week alone, 3rd of March till now, or till the highest point, the euro has climbed more than 4%. Looking at a weekly chart, let's look at it on a weekly chart. This looks to be the strongest rally in the euro since this rally that had taken place on 7th of November, in the week of 7th November 2022. This rally here was as much as 4.7%, right? Open to close 4.7%. And today and for this week, I would be surprised if the euro comes close to this level by the end of the week. That's a very strong jump, very strong rally in the euro. And coming back to the daily time frame, right? We can see that it seems to have stalled at around the 1.0820 level, right? It seems to have stalled around the 1.0820 level. So let's try and identify where the key resistances sit, right? I see a nice swing high resistance taking place here on 5th of November 2024. This level sits at 1.0926. This is where I'm going to identify the first resistance, and higher up, I see a nice overlap. Right, I see a nice overlap at 1.1012, right? This is where I'm going to identify the second resistance, right? Now that we've identified the resistances, I'm going to run a Fibonacci retracement, starting from this swing high on the 25th of September, going down the swing low on the 13th of Jan, looking at all the fibs, right? What's quite important now to note is the euro looks to have stalled at exactly the 61.8% retracement. Now, when I look across this level here, which is at 1.0820, I don't really see any uh, resistances like a pullback, overlap, or swing high, right? So in this case here, right, it actually looks to have stalled pretty much at the retracement level. So this is going to be important. So keep an eye on this level because this is going to serve as our upside confirmation level. Right, so what this means is if the euro can break above the 61.8% Fibonacci retracement, we're likely to see this currency pair rise up towards the first resistance, the swing high at 1.0926. And higher up, we can see that the 78.6% retracement sits pretty close to the overlap at 1.1012. So we're going to keep 61 and 78.6% retracements in the analysis here. Right, now what about support? What about support? Right, looking slightly below, right? It looks like back in June of 2024, we can see the euro forming a nice base here, forming a nice bottom of nice trough at around 1.0675. So this used to function as a strong support level, and that did materialize for a period of 2 to 3 days in the first week of November before finally giving way. And now price has broken above it once again. So this level here could potentially function as a pullback level. So that's where the first support for the euro is going to be identified. It's a pullback support level. Stretch it out here. Yeah, this is a bit more cleaner, right? Pullback support level at 1.0665. Now, beyond the first support, there is another pullback that I would like to identify or highlight. And that level sits at 1.0597. Right, so this is how the second support has been identified now. Now, with the euro currently pulling back off today's highs, we can also now run a Fibonacci retracement, starting from this swing low on the 28th of February, going up to the swing high of today. Looking at all the fibs, we can see that 38.2% retracement sits pretty close to the first support, and 50% sits pretty much exactly with the second. So if we're going to keep 30 and 50 in the analysis, and highlight the first support as a zone here. Go. Now, during the interest rate announcement and during the press conference by President Lagarde, this is definitely going to inject a lot of this is going to heighten the volatility for this currency pair later today. So do watch out for that. but any clear break above the 61.8% retracement, that's probably going to be the signal that we need for the euro to maintain its current bullish momentum and perhaps rise up towards the first resistance at 1.0926. Right, so these are the key levels here for the euro on the daily time frame. Now let's move on over to gold. Right, so XAU USD is the ticker symbol for spot gold, and after making an intraday high on intraday all-time high on Monday, 24th of February, this level was set at $2,956.31 per ounce. And after making that high, gold prices actually pulled back as much as 4.2% by last Friday, but then it recovered this week, right? Beginning of this week, gold prices recovered, staging 3 pretty strong days of higher prices, right? Before running the resistance today at around $2,935 per ounce. It looks to be pulling back. But generally, right, we can see that, of course, we can see that gold has been in a significant uptrend, especially since October 2023, right? A very significant uptrend. When we look at it on a weekly time frame, now we can see gold prices forming a nice base here on 24th of October 2022 at around $1,660 per ounce. And since then, it's pretty much not looked back. Of course, there have been strong pullbacks along the way, right? And even now, but we've seen all the pullbacks being reversed and gold continuing to make a new high every time. Now, so what this means is we should be looking for potential pullback opportunities for gold because the bullish momentum is really strong. There's a lot of fundamental drivers driving this commodity higher as well, right? So any pullback is likely to find support. So let's try and identify the first support for gold and the second as well. Now, of course, after making this swing low here last Friday, right? This is where I would identify the first support for spot gold. And I can see that previously on 31st of October last year, gold made a swing high here, swing high resistance here, and which is where it ran into resistance once again on 24th of Jan. So this level at $2,780 was previously a strong resistance barrier, which now can be used in the identification of another potential support level. Right, the first support for spot gold is this swing low here. And that level sits at $2,834 per ounce. And second support is a pullback level at 2,787, right? And that's going to be the second support here. Right, let's zoom in a little bit. Okay, there we go. Now that we've identified the first and second supports, we can also run a Fibonacci retracement, and we see a nice uptrend that begins from 18th of December. Begins from 18th of December till the intraday all-time high on the 24th of February. And when we look at all the fibs, we can see that 50% sits pretty close to the second support, while 38.2% is in no man's land. So let's just keep 50% in the analysis, and I would like to keep 61% as well. I'll explain to you in a bit why is that the case. All right, hi W, good to see you as well. Well, glad to see you have joined us today, right? Now, looking at the 50%, right, this identifies a pretty strong support zone between $2,770 and 2,787. Now, with gold prices currently pulling back towards this swing low support at 2,834, this is where we can also identify a potential buy opportunity to go long on this precious metal, right? So should gold pull back towards this support zone here between $2,835 and $2,860 per ounce, and it can stabilize within this zone. This helps us identify another decent opportunity to go long on spot gold. And if that rebound does materialize, we'll be identifying several take profit targets. The first would be this barrier here, right? The barrier of this week. We see gold prices stalling at around $2,920 per ounce this week. So this is where the first take profit target would be identified. So we've identified this as the first resistance. And of course, where the intraday high has taken place, that would be the second take profit target. And that would sit at $2,956, $2,954 per ounce. Now, the 61% is important as well because it also highlights another significant overlap level, right, at 2,715. This is just something I want to highlight uh, as well because we can see support being formed here 23rd of October, then resistance on the 25th of November, then again on the 11th of December, and then resistance again on 17th of Jan. So this creates a very significant overlap, which is accompanied by 61.8% retracement. This is just something to take note of. Very significant overlap level that's accompanied by 61.8% retracement. Of course, gold is trading pretty far from this second and other from the 50 and 61.8% retracement levels, but this is something to bear in mind for the future should we see a much larger correction take place. Now that price has started to pull back today, right, I can also identify a nice, pretty significant descending trend line to be aware of. Right, this trend line is going to be important as well because should we see gold prices pull back all the way into the first support zone and stabilize here, right? Not only does it help us identify a potential opportunity to go long, we would also be looking for it to break out of this descending trend line. Right? If the gold prices can fall all the way down towards the first support zone, stabilize here, it helps us identify a decent buy opportunity. And then should the bullish reversal or bullish bounce take place, we would be looking for it to clear through this descending trend line. Because if this descending trend line, if price breaks through the descending trend line, it gives us further conviction, higher confidence that gold price could make a good run towards the first resistance here at $2,920 per ounce. All right, so these are the key levels for gold on a daily time frame and beyond the intraday all-time high, right? Beyond the intraday all-time high, where could we identify other resistance levels? In this case, we're going to have to rely on the Fibonacci extension. And to find that extension level, we're going to be running a retracement from the swing high on the 24th of February, going down to the swing low on the 28th. Key extension levels sit at 127 and 161%. And this is where we can identify future areas of resistances for spot gold. Right, and those levels sit at $2,990 per ounce and $3,030 per ounce. Right, okay, so these are the key levels here. Now let's move on over to WTI oil. Right, and we can see that this commodity has been in a prolonged downtrend as well since mid-January, right after making a swing high resistance here at around $79 per barrel. Oil prices have not looked back. WTI oil has dived more than, let's see, more than 18% from peak to trough, right? This is a huge drop in a matter of 2 months, right? Just about 8 weeks or so. Crude oil prices, WTI oil here has tanked more than 18%, huge drop for this commodity. Now, there seems to, just like the dollar index, there seems to be no bottom in place for WTI oil, but let's try and identify several levels, right? Now, when we zoom out, when I zoom out for WTI oil, I see a very significant swing lows taking place here in March and May of 2023. And if we zoom out a little bit more, we can see other support levels that had taken place in August and November of 2021. So perhaps, right, let's come back to where oil is trading and switch back into the weekly time frame, because this would help us identify easily identify the first and second supports. Now, crude oil is approaching what I see, or is testing what I see is a very significant multi-swing low support that had been in place since November 2021. Right? So this is almost like a 4-year support level that looks to be tested this week, right? It's definitely testing this level this week. And what this uh, is probably going to serve as a downside confirmation level, because if this level at $66.11 gives way, right, we are likely to see this commodity drop even lower here. Beyond this current support, right, there's another swing low that has taken place, a pretty significant swing low taking place here on 16th of August, and another sub base here being formed in April of 2021. And when we look from this swing low, which is the lows of April 2020, right, we can also see that we are able to draw a nice Fibonacci retracement as well. But before that, let's try and identify the second support level. Perhaps it's going to be somewhere around here. Right, so second support, or rather first support, because this current level at $66.11, right, is serving as the downside confirmation level. This looks to be a pretty strong support zone here for WTI oil at around $59.20. Okay, now that we've identified the support levels, we can run a Fibonacci retracement from this swing low on 20th of April 2020 to this swing high here on the 7th of March 2022. Looking at all the fibs, right, we can see that the downside confirmation level is a multi-swing low support that's accompanied by 50% retracement. Pretty strong support level, which looks likely to give way this week, right? And beyond that, there's another swing low support here at $59.20. But we can see 61 and 78.6% retracements somewhat sitting in no man's land. So that's fine. We'll just keep 50% for now, right? And at the same time, because there's a nice retracement here, there's a nice retracement to the upside. We can also run a Fibonacci retracement starting from this swing low here on 18th of November last year, going up to the swing high on 13th of Jan. The purpose of this retracement is to look for key extension levels at 127, 161, and we can see quite nicely the 161% extension aligning very well with the first support. Right, so this support level gains further significance due to the uh, presence of the extension at 161%. So that means if this level at $66.10 gives way, right, we have a potential bearish breakout opportunity. If that level gives way, we are going to be identifying a take profit target for any short trades between $61.80 and about $59.40, right? This will be the target zone for any short trade that we may have for WTI oil, especially if the downside confirmation level gives way, right? And we see crude prices slide lower. Now, in terms of resistance, uh, there's a nice swing high resistance being formed here in mid-January, right? So this is where one of the resistance levels would sit. And now let's return back to the daily time frame, right? You can see how we had to switch into the weekly time frame to identify support levels, because clearly this recent move in WTI oil has been pretty huge, right? This bearish reversal has been pretty huge. Now the resistance that we identified in the weekly time frame can be fine-tuned a little bit. So let's set it to here, right? This is a multi-swing high resistance, or perhaps, yeah, probably this is much better. Multi-swing high resistance at $79.70. Um, in between, there's certain resistances, that intermediate resistances that we can identify as well. I see a nice pullback level, right? Pullback resistance level at around $68.70. That's a pretty decent pullback level here. We can identify this as the first resistance, and higher up, there's another nice overlap at around $70.60, which we can identify as the second resistance. Along the way, you can see there's several key resistances that can be identified. And of course, the very significant one that we can spot on a weekly time frame is at $79, but it's of course pretty far from when WTI oil is currently trading. Now it looks like WTI oil has sort of stabilized today at around $66.40 or $66.10. Looks to be making a slight retracement higher. However, right, I think the downside, the bias is still to the downside. So any retracement to the upside, right, is likely to be met with resistance. Now on this downtrend here, right, I think we can identify a pretty decent downward channel. I believe so. We can identify a pretty decent downward channel here, right? We can identify a pretty decent downward channel beginning from the third week of February. So that means any retracement to the upside could be restricted by the upper trend line of the downward channel, as well as the first resistance, which sits at $68.70. Now, on this downtrend here, we can also run a Fibonacci retracement starting from this swing high on 20th of February, going down to the swing low on 5th of March. Let's look at all the fibs. We can see 50 and 61% retracements aligning very well with the first and second resistances. And also we will keep 23 and 38% here. Oh, yes, yeah, we just keep all of those. Hang on. And keep 23 and 30 as well. But this is the purpose of that is right to see where WTI oil will stall, right? It could stall at a 23.6% retracement or the 38.2% retracement as well, right? Because there's no real other major resistances that we can identify. So in this case, we'll try and see if crude prices can make a small bounce. Would it be restricted underneath the 23 or 38% retracements, right? Of course, if it reaches the first resistance here, that's quite likely going to see significant headwinds at this level here. All right, so these are the key levels for spot gold. Sorry, for WTI oil. Let's just come back to the weekly time frame so we can appreciate this uh, analysis a bit more, right? We can clearly see it's been in a prolonged downtrend since mid-January, 2 months of strong downtrend. It has dropped nearly 18%, looks to be dropping even lower this week, right? And if the downside confirmation level at $66 gives way, we are likely to see crude prices, WTI oil prices slide lower, and any potential bearish breakout. For any potential bearish breakout, we can identify a suitable take profit target between $62.40 and about $59.40. All right, let's move on over to the indices, right? Let's move on over to the indices. Taking a look at Germany 40 first, looking at the daily time frame, right? Germany 40 is the instrument that tracks the DAX futures, and this index has made its latest intraday all-time high today at 23,437. Now, it had broken out of the prior resistance here on 3rd of March, right? It took a while to break out of this level here because after that, on Tuesday, it pulled back sharply before Wednesday, making a comeback and breaking higher as well. Right, so one of the support levels, intermediate support levels can be identified at 22,879. This is a pullback level, right? But because we can see here, this part here, the DAX crossing this level several times, this is not going to serve as the first major support. More of an intermediate support, hence is going to be labeled as the dotted line here. Now, the first major support for the DAX is this swing low that was formed on Friday, 21st of February. That's at 22,172. And now on this nice uptrend, we can run a Fibonacci retracement from this swing low on 5th of August, going up to today's intraday all-time high. And we can see that there's another nice double bottom taking place here as well. And maybe there's a pretty decent, no, not really overlap or anything here. Probably this is going to be it. Second support is probably going to be here at 21,000. So we're going to keep 23 and 38% retracements in the analysis. And highlight this as zone. Right, now on this uptrend here, the smaller uptrend, we can also run another Fibonacci retracement from 21st of February, going up to the intraday high here. And we can see that the 38.2% retracement, right, sits pretty close to the pullback, which is the intermediate support. Right, so should we see the DEX return to this level and stabilize, it could help us identify a potential opportunity buy entry as well, right? Another opportunity to go long and around the 38.2% retracement, right? So if the DEX pulls back today or perhaps even tomorrow, and then it proceeds to stabilize at around 23,000 level mark, this is where we can identify another opportunity to go long as well. And not only that, I think we can also spot, I can also spot a very nice ascending channel as well, right? Yes, sorry, ascending trend line. That is a very nice ascending trend line that I want to highlight as well. There we go, right? Very nice ascending trend line that has been in place since mid-January. Now, with the DAX making its intraday all-time high on Thursday, 6th of March, where can we identify another resistance level? So such a scenario, we can rely on Fibonacci projections and extensions. So let's try with an extension starting from point number 1 here, 3rd of February, going up to point number 2, 19th of Feb, and ending at point 3, the 21st. Looking at all the fibs. Oops. Where the key projection levels sit at 61.8%, 78.6%, and 100%. Now we can already see that DAX has already cleared 61.8%, 78.6% sits at 23,559, and 100% sits at 23,953. So we can use these projection levels and get rid of 61.8. And we can use these levels to identify the resistance barriers beyond the intraday all-time high. Now on this downtrend here, we can also run a Fibonacci retracement, right? Starting from this swing high on 19th of February, going down the swing low on the 21st. We're going to look for key extensions at 127 and 161%. And okay, it's a bit messy here, but just bear with me, right? We can already see DAX has cleared 127%, the extension at 127%, but 161 is pretty much where the intraday all-time high was formed. So we can identify the first resistance as a zone between the Fibonacci extension at 161% and the Fibonacci projection at 78.6%. All right, these are the key levels here for the DEX. Now, before we continue, I'm just going to launch a poll as well. Truly appreciate it if you guys can give me your feedback with regards to today's webinar. And then we'll continue the session uh, with, I guess, Bitcoin. Let's take a look at Bitcoin since we've seen cryptocurrencies it come back into highlight once again. And of course, should you have any other requests, please do drop them in the chat box. Be more than happy to go through the analysis with you. All right, great to see all the responses coming in. Right, truly appreciate it. Leave the poll running for another 30 seconds or so. All right, that's great. All right, that's most of you, or that's all of you have voted. All right, truly appreciate it once again. All right, now let's resume the session. All right, then let's take a look if there's no further requests. Right, then let's take a look at Bitcoin, right? Since we've seen cryptocurrencies uh, come back into the limelight once again, right? So looking at the daily time frame, and we can see that Bitcoin has made its most recent intraday all-time high on 20th of January. That's at $109,356. But since then, it's dropped as much as It's dropped nearly 30%, right, in a matter of uh 6 weeks, right? It had pretty much entered bear market territory. Bitcoin, right, dropping almost 30% from its all-time high on Monday, 20th of January. Since then, it has sort of recovered, trying to recapture the $96,000 level, but it has failed uh at the beginning of this week. So we can see very clearly where the first resistance can be identified. Right, this is almost like a pullback resistance here, right? A very strong pullback resistance at around 95,678. This is where we can identify the first resistance for Bitcoin. And higher up, I see an overlap resistance at around 101,237. This is where we can identify the second resistance here. Now, on this nice downtrend, we can also run a Fibonacci retracement starting from this swing high on 20th of January, going down to the swing low on the 28th. Taking a look at all the fibs, right? Okay, we can see right now the retracement levels align well or close enough to the first and second resistances. But perhaps that's fine, but I think I still like to keep an eye on the golden ratio, right? The 61.8% retracement. So let's keep that level on and highlight the first resistance as a zone over here. Now, in terms of support, right, there's a significant swing low taking place here and around 84,500. Of course, this week here on Friday, the 28th of February, drops as low as 78,000. But generally, we can see a nice base being formed here. So this is where I would identify the first support for Bitcoin at 84,000, but not the strongest level, right? Because uh, we see this wick on the 28th dropping significantly below here. Now the second support is where it gets a little bit scary because there's nothing in between 84,000 and 80,000. The next major support that I see for Bitcoin is at this pullback level at 73,121. Now this level previously functioned as a very strong resistance, right? We see resistances taking place several times, 13th of March 2024, 9th of April. You can even argue here in May and June, Bitcoin ran into resistance. And of course, this one is very clear, 29th of October, significant resistance here. So this level previously functioned as a multi-swing high resistance, and with price breaking above and trading above it, this level is now likely to function as a pullback support. So that's where we identify the second support, which is at 73,120. And as I said, right, it's a pretty huge gap between 84,000 and 73,000 here. There's pretty much nothing in between here that we can identify as a major support area. Now, there's also a descending trend line that I would like to highlight for Bitcoin, right? If this descending trend line can or if price can break through this descending trend line here, that's probably going to bring back, we're probably likely to see a much stronger move to the upside, a much sustained move to the upside. But for now, as long as Bitcoin continues to remain restricted under this descending trend line, we're likely to see much weaker moves, right? If you really want to see continuation of the strong bull trend, that's what we saw at the end of last year, right? I would really like to see this descending trend line give way, right? We'd like to see Bitcoin smash through the descending trend line and make a good run towards the 61.8% retracement and the second resistance at 101,000. Right, now on this uptrend here, that begins from 28th of February going up to the high on 2nd of March. The purpose of running this retracement is to look for extension levels, and we can see the 127% extension sitting very well with the second support. 161 is sort of in no man's land for now, so we don't need that. Let's see, there's a projection that we can use. Projection involves 3 points, so let's start point 1 from 21st of February, going, point 1 starting from 21st of Feb, second point 28th, and third point 2nd March. Let's look at key projection levels, which are 61, 78, and 100%. Right, so 1, 2, 3. Right, we can see the 100% projection aligning very well with the second support as well, and 78.6% aligning very well with the bottom of the wick. So let's keep 70 and 100%, and let's just adjust the extension level a bit here. The labeling of the extension level, right, there we go. So we have a strong Fibonacci confluence at around $73,000. We have a Fibonacci projection at 100% and a Fibonacci extension at 127%. Right, so these are the key levels for Bitcoin here. Remember, a clean break through this descending trend line that has been in place since 31st of January is likely to trigger a much stronger and more sustained move to the upside for Bitcoin here. All right, so that's all I've got for you guys today. Thanks for tuning in to today's session brought to you by IronFX. And take note, even though we approach the tail end of the week, there's quite a few important news events that are going to take place. Today, the ECB will release its monetary policy statement, and President Christine Lagarde will deliver a press conference. Right, that's going to take place at 1:15 p.m. GMT time. Interest rates decision drops at 1:15 p.m. GMT, where the ECB will make a 25 basis point reduction in its main refinancing rate, followed by the press conference at 1:45 p.m. GMT. And tomorrow, we've got the highly anticipated non-farm payrolls and unemployment rate being released by the Bureau of Labor Statistics. That drops at 1:30 p.m. GMT, followed by the respective speeches by Chairman Fed Chair Jerome Powell, as well as US President Donald Trump. Right? That's all I got for you guys today. Right? Take care. Have a great trading week. Right? I'm going to wish you all the best in your trading journey and looking forward to seeing all of you at the next session. All right. Thanks, everyone. Take care and catch you all soon.